Welcome to the Las Vegas Real Estate Report for August 2025. In this video, I'm going to cover the July Las Vegas key housing stats, talk about interest rates. They were going down for a minute, and now they're right back in that right below 7%, around 6.6 or so. We'll talk about what's going on with that. We're going to talk about more inventory means more resale opportunities if you are considering buying. We're going to look at also new home builder incentives. Hi, my name's Jan O'Brien. Along with my co-team leader, Cosmo Morabbi. We are with Simply Vegas, and we have a team of experts who cover the whole valley. Make sure you reach out to whoever might have sent this video to you. If you're not already, please subscribe to our channel. We do an update on a monthly basis happening with the local Las Vegas area real estate market according to the local multiple listing service. Let's jump right in, and this is the August report for the July stats. I'm only reporting on single family homes. Want to point out that it's 485. It's been 480 or 485 all year through 7 months of the year. I have another chart and I'll show you that. That's up 1% year over year as far as median sales price. Units sold down almost 6% for 2021. New listings up a little bit more than that. This is why we now have units available, which means the amount of inventory that was available at the end of July for single family is up 54% year over year. And that is just simply a combination of more listings coming on the market, more sellers saying, I'm ready to go ahead and sell my home, but not enough new buyers coming onto the market. So that's what that shows. If you're interested in looking at the condo stats, here they are here. Median sales price for condos and townhomes together is $290. 3.5 months of supply for single family simply means if all things were even for the snapshot that we're looking at right here, it would take, for the demand and the amount of homes available, it would take 3.5 months for them all to sell based on the pace. Cash sales just stayed under 25% all year. It was this last month, 23.8%, and we've been under 1% for the last year, 3 years for distressed properties at short sales and foreclosures amounted to 0.9% of all sales in the month of July. This is a chart I showed just to give everybody perspective. So here's what happened in 2024. Started the year at 445, and you can see we had this big spike up where we hit a high of 482. This chart's a little off. There's different numbers that come from different places, but we finished the year out right around here at 475. And then, as I just said, we're 3 months of 485, 2 months of 480, and now 2 months of 485 has been what our median sales price for single family is going on with interest rates. It's just the same story, different month. And I put these statistics up, and this is just a daily rate from Mortgage News Daily to show you. I'm just going to focus on the 30-year fixed conventional, but here are all the others if you're interested in looking. So red means the rate went up and by how much, and then or green means it went down. You can see that we started the end of July at 6.81 for just this one chart from Mortgage News Daily. And here we are on August 20th as I'm recording this on the 21st. This is the 20th, 6.61. We did get down a little bit, and we saw some lows for a conventional rate in the last week or two that were like 6.5 right in here. But then you can see they started to tick up a little bit. It has to do with all the economic data. So the jobs report that came out that was not so good is what made the market shift and the mortgage rates go down a little bit here. But then we've had some mixed data with the inflation and the core, the CPI, and all the other things that the Fed and other economists track. And the mortgage industry is obviously looking at all that and what happens with the market, the 10-year treasury, all that good stuff is what is moving the interest rates, not just what the Fed is doing with the short-term interest rate. So expect them to stay where they are here. A little fluctuation like you see in this chart. But through now to the end of the month, I think we're seeing now that we're thinking September, the Fed's going to do one adjustment. I think it's a 50-50. The latest statistics I see, 50-50 as I record this, chance that there'll be a rate cut. Again, it's always dependent on the economic data, the inflation data in particular. So what's the best strategy? Stay informed. Get pre-approved if you are interested in purchasing, because one of the things is be ready to act. If the rates move, it's all about timing. Most people try to time the market and wait for the rates to come down. And by the time they're down to where you want them to be, everybody's making that decision to jump back into the market. There are opportunities, more on that in a minute. New homes for the last couple of years have continued to be the thing to look at if you're in a position to buy right now. The builders literally always have some kind of incentive going on. And this is the ones that are currently going on, again, as I record, with over 230 new homes across the valley. There are a lot of options, from townhomes to single family, starter homes to luxury homes. But we have everything from flex cash, meaning here's a bunch of money that you can use on the quick move-ins to do things like cover your closing costs, buy your interest rate down, even discount the purchase of the price. We've got a couple builders doing that. There's a couple builders doing this 7-6-30, this 30-year 7-6 arm, which is good. You can be at a 3.875 conventional loan for the first 7 years, and then it adjusts. The 7-6 means every 6 months it can adjust, and it's tied to an index, and it can go 1 to 2 points. The whole thing about a 7-year that's not so bad is if you're thinking that you're not going to be in your house for 7 years, that might be an opportunity. The builder is covering the cost of that. You can get a 30-year fixed at places for 4.875. We just closed a transaction last week for an FHA townhome, 3.99% fixed for our buyer. I don't know when the rates are going to be 3.99 again, fixed, without having to buy the interest rate down. Here's another promotional buy with 2-1 buy down. So 2.75, actually 2.75, 3.75, and then a 4.75 for the balance of the whole term, plus 3% towards closing costs. So bottom line, we really know if you're thinking about buying new, we're new home experts. We know the builders, we have the relationships, we know where we can negotiate, and the deals are the quick move-ins. Now, if you're going to build from the ground up, there are several builders that do that. Pulte, KB, Woodside Homes, and others. There are some incentives, but they can't guarantee and lock in any interest rates. Give us a call and we will help you sit down, have a strategy session, to go over what your particular wants and needs are. So again, what are the opportunities for a buyer? Inventory is up, demand is down, which means there's more options and more negotiating power on the resale side, definitely on the new home side, as I just said as well, especially if you're able to move now within the next 30 to 60 to even 90 days. There's always new quick move in inventory. If you are in a position to buy and you really like a house, and the rate that you might be able to get for now, then consider buying. You can always refinance later if you think it's going to come down slower. If you want to buy a resale, and we have successfully negotiated concessions for our buyers in the last couple months to be able to buy the interest rate down and get closing costs covered and so forth, even on the resale side. There'll definitely be more competition. If you're sitting on the sidelines saying, I'm going to wait till the market crashes, don't really think that's going to happen anytime soon. It would require a major shift in the economy where people would be losing their jobs and so forth. People have equity unless they purchased in the last couple of years. They have equity. So even if they do get in trouble, they can sell their home, cash out, and then move on to whatever's next for them. Definitely opportunities with the builders. Again, reach out. We'll help you with that. And if you're thinking of selling, the high rates are what's really causing all the price reductions. We're seeing a lot of price reductions, and it's really on the homes that need some updating. They're not up to, but that's not always the case. There could be situations where someone's selling their home and there's a lot of new home competition. And it's very, very hard to compete with the builders offering 6% towards closing costs and reducing their prices. The bottom line is if you need to sell and then buy, there could be an opportunity where if your home is in great shape, it's a great location, it's a desired area, then it will get more looks and possibly offers. People can be choosier right now. That's just the bottom line. But when you take your seller hat off and sell and then go purchase, if you're staying in the area, that's again where the opportunities come in to negotiate on the buy side. Homes that are updated and well maintained, not overpriced, priced really well, those are the ones that are moving quickly, because most buyers walk into a home that is 20, 30 years old, and if it still has the original flooring and counters and all that, they go, I don't want to spend the money to renovate to today's standards. That's why you're seeing a lot of homes sit on the market right now that need some updating. They may be well maintained, but they may be outdated. That is our August report for 2025. Make sure you subscribe to our channel, and we will see you next month for the Las Vegas area, what is happening in the housing market.